Welcome back. Today, we're doing a deep dive into Elastic's latest results, a really strong first quarter for their fiscal 2026.
Absolutely. The numbers definitely turned some heads, and the market reaction was quite positive.
Let's jump right in then. Q1 ending July 31st. Total revenue came in at $415 million.
Yeah, and that's a solid 20% jump year over year, or 18% if you look at constant currency. Pretty strong start.
And the subscription revenue, which is key, right? That hit $389 million.
Also up 20%, 19% in constant currency. So really consistent growth across the board there.
What about Elastic Cloud? That's always a focus.
That was a real highlight. $196 million, that's up 24% year over year, both reported and in constant currency. Shows the cloud strategy is really paying off.
No, context is everything. How did these numbers compare to what, the analysts and Elastic themselves were expecting?
Well, that's where it gets interesting. Elastic CEO Ash Kulkarni actually said they surpassed the high end of our guidance across all metrics, which is quite a statement.
Okay, so they beat their own top estimates. What about Wall Street?
They blew past those too. The non-GAAP diluted earnings per share, EPS, came in at 60 cents.
60 cents. Wow, what was the expectation?
Analysts were looking for around 32 cents, so a really significant beat on profitability.
And the revenue figure, that $415 million.
That also comfortably topped the street's expectation, which was pegged around $397 million. So not just hitting numbers, but exceeding them quite clearly.
And the immediate market impact, we saw that right away.
Oh yeah, the stock jumped, 16% in extended trading right after the announcement?
That's definitely more than just a little bump. It feels like a strong vote of confidence from investors, wouldn't you say?
Absolutely. It signals belief, not just in the quarter's results, but in the strategy and the execution moving forward.
Okay, so these are impressive headline numbers. But let's unpack this a bit.
Yeah.
What's actually driving this performance? What's resonating with customers?
Right. It's not just about the financials in isolation. It really connects back to customer growth and their whole search AI strategy.
The CEO mentioned that, right? Ongoing demand and solid execution.
Exactly. He linked it directly to the value customers are getting from their search AI platform, especially now, with AI being such a huge focus everywhere.
So are we seeing that in customer numbers?
We are. They now have over 1,550 customers with an annual contract value, or ACV, over $100,000.
1,550. How does that compare?
That's up nicely from over 3,370 in the same quarter last year. So good growth in those larger deals.
And are existing customers spending more? What's the expansion rate looking like?
It's holding steady around 112%. That means, on average, existing customers increase their spending by 12% over the year.
Okay, 112%. That shows stickiness and that customers are adopting more.
Precisely. They're not just staying, they're expanding their usage. That's a powerful indicator that the platform is delivering real, ongoing value.
And that kind of expansion often ties into new features, new capabilities. Elastic's been busy on the innovation front, haven't they?
They really have. Several things stand out this quarter that likely fueled that customer interest and expansion.
Like what? What caught your eye?
Well, first, they expanded their Elastic Cloud serverless offering. It's now available in more regions across AWS, Azure, and Google Cloud.
Making it easier to adopt, less infrastructure hassle.
Exactly, lowering the barrier to entry. Then there's the new Elastic AI SASE engine, or EASE.
EASE, what's that?
It's a serverless security package using AI for, smarter, faster threat detection. Think better security with less manual effort for security teams. Kind of a big deal in cybersecurity.
Makes sense. Anything else on the product side?
Yeah, a couple of other key things. They launched Logs Essentials, basically making critical log management easier and more efficient.
Okay.
And for the AI folks, they improved vector search performance quite a bit using techniques called better binary quantization, or BBQ, and a new algorithm, Acorn 1.
BBQ. Okay. So basically faster, more accurate AI search results.
That's the gist. Really important for things like retrieval augmented generation, RR, making AI answers more relevant.
Yeah.
And finally, cross-cluster search in eSchool is now generally available.
Allowing searches across different clusters easily.
Right. Simplifies things massively for companies with large distributed data setups. These aren't just small tweaks. They enhance the core platform significantly.
Sounds like a busy quarter for the product teams. But it's one thing to innovate, it's another to get recognized for it. How is the market seeing Elastic's position? Any nods from analysts?
Definitely. They got some major validation. Named a leader in the 2025 Gartner Magic Quadrant for observability platforms.
That's significant. Gartner leaders are always closely watched.
And also a leader in the Forrester Wave for security analytics platforms just recently for Q2 2025.
Both Gartner and Forrester. That's strong external validation in two critical areas.
It really is. It helps potential customers feel confident in choosing Elastic. Plus, they got the #1 ranking in an AV comparative security test. Real-world proof points.
And partnerships. Are they building bridges there too?
Yeah, strategically important ones. They're collaborating with Dell and NVIDIA on Dell's AI data platform.
Integrating search AI into that hardware ecosystem. Smart?
Very. And they also inked a partnership with the U.S. General Services Administration, the GSA.
Opening doors to federal agencies.
Exactly. Making it easier for government bodies to use their Search AI platform for IT modernization. These partnerships really extend their reach.
Okay, so strong results, solid customer growth, innovation, and external validation. But here's where it gets really interesting. What about the future? What's the guidance look like?
Right, looking ahead, Elastic gave pretty detailed guidance, and it continues the optimistic trend. For Q2, fiscal 26, ending in October,
Yes.
they're expecting total revenue between $415 million and $417 million.
So roughly flat sequentially, but what's the year-over-year growth?
That represents about 14% year-over-year growth at the midpoint, both reported and constant currency. And notably, that range is actually above what analysts were predicting, which was closer to $410 million.
Another beat on expectations then. What about margins and earnings for Q2?
They're projecting a non-GAAP operating margin around 16% and non-GAAP diluted EPS between 56.6 and 56 cents. Still looks pretty healthy.
Okay, that's Q2. What about the full fiscal year 2026, ending next April?
The full year picture is also quite strong. They guided for total revenue between $1.679 billion and $1.689 billion.
And the growth rate there.
That's about 14% year-over-year growth at the midpoint, or 13% constant currency. Again, maintaining that solid growth trajectory.
And profitability for the full year.
Non-GAAP operating margin expected around 16% again, and non-GAAP diluted EPS projected between $2.29 and $2.35.
How does that full year guidance stack up against Wall Street's prior expectations?
It topped them. The street was looking for around $1.66 billion in revenue and $2.28 in adjusted EPS. So Elastic is signaling confidence for the entire year ahead.
Good to see. And it's probably worth just quickly mentioning they base this guidance on certain assumed exchange rates, right? Like euro dollar and pound dollar.
Absolutely. Those are always baked in. They mentioned using rates like €1 to 1.16 US dollars and £1 to 1.35 US dollars. Currency shifts can always nudge the reported numbers slightly.
Okay, so let's pull back again. We've seen the strong quarter, the drivers, the positive outlook. What does this all mean strategically? How is Elastic playing this AI wave as the search AI company? Why should you, the listener, care?
It comes down to the massive data problem businesses are facing. You hear these staggering numbers, like 480 exabytes of data produced daily predicted by 2025. It's an enormous mountain.
Making it almost impossible to find what you actually need. The needle in the haystack problem, but the haystack is growing exponentially.
Exactly. And then you layer on generative AI, which is transforming everything. 72% of companies are already using AI somewhere. But for Gen AI to be truly useful, not just hallucinate, it needs effective search.
How so? Why is search so critical for AI?
Well, it provides relevance finding the right information for the AI to use. It helps with understanding natural language queries. It has to scale to handle huge data sets. And fundamentally, search acts as the framework to retrieve the specific up-to-date context that makes AI answers accurate and trustworthy.
Okay, so search is foundational for good AI. What's Elastic's unique answer here?
Their Search AI platform, and specifically the concept of the Search AI Lake.
Search AI Lake. What is that exactly?
Think of it as a different kind of data repository. It's stateless, which means it's flexible and resilient, not bogged down by past states. It's optimized specifically for AI workloads, handling both structured and unstructured data.
And the key benefit?
Speed and relevance. It's designed for context-aware search and retrieval in milliseconds, not the seconds or minutes you might wait for traditional data warehouses or data lakes.
Milliseconds. That's near real time. So it's like an incredibly fast, intelligent librarian for your data.
That's a great analogy. Instant access to the exact piece of information the AI or human user needs. That speed is crucial for real-time decision-making and interactive AI applications.
That makes sense. And for businesses considering this, how flexible is it to deploy? Do you have to go all in on their cloud?
No, that's a key strength. They offer flexibility. You can run it self-managed on your own infrastructure if you want full control. You can use Elastic Cloud Hosted, where they manage the infrastructure for you in a dedicated setup, or you can go with Elastic Cloud Serverless, which is the completely managed auto-scaling option.
So choices depending on your needs for control, cost, or convenience.
Exactly. They cater to different operational models.
So pulling it all together, why does Elastic win in this space? What gives them the edge?
I think it boils down to a few core powers, as they might put it. First, the power of partnerships. Those deep ties with AWS, Google Cloud, Microsoft Azure.
Co-investments, joint selling.
Right. It makes it easier and often better for customers running on those clouds. Second, the power of the commercial model.
The cost advantage.
Yeah, a compelling total cost of ownership, or TCO, plus that flexible consumption-based pricing for cloud. Pay for what you use. It's attractive.
Makes sense. What else?
Third, the power of the community. Millions of developers, billions of downloads. That creates a huge ecosystem, drives bottom-up adoption inside companies.
That grassroots support is powerful.
Immensely. And finally, the overarching power of the platform itself.
How so?
They approach problems with that search and AI lens, focusing on speed, scale, relevance. They've got a strong AML foundation baked in, handle all sorts of unstructured data, and it's all one stack you can deploy anywhere.
Cloud, on-prem, hybrid.
Wherever you need it. That integrated search-first approach to data and AI is their core differentiator.
And this all feeds back into those 6 growth vectors they talk about, right?
Yeah.
More data, more cloud, higher tiers, more use cases, more solutions, and new customers.
Exactly. It's a virtuous cycle. The platform's power drives adoption across all those vectors, fueling future growth.
So wrapping this up, Elastic's performance really underscores how vital that combination of search and AI is becoming. Transforming data into insight fast. It leaves you thinking, doesn't it? In a world drowning in data, how critical will these hyper-fast, context-aware search AI platforms become? What does informed decision-making even look like when only the absolute fastest systems can keep pace with the information flow? Something to ponder.